Hi everyone, welcome back to my channel. So today we are going to do a top-down analysis on the currency pairs and predict the next move for the new week. This is DXY and the pair I trade for now is just JPUSD only. So those are the pairs I'm going to analyze on the chart. So starting with DXY, I can see here that an external range liquidity was being taken from here. An external range liquidity was being taken from here, right? This is for 1 month, the buy side liquidity. And we can also see that a sell side liquidity was being taken out from here, which has signaled to us that market did what a change of character above here. Now I'm going to look for the closest drawn liquidity. We have OB that has been filled already. And if I draw my Fibonacci from the high to the low, I'm looking for the next draw on liquidity the market is going to target next to be able to pull it down, right? Okay, so I'll put this line as 50% of this order block, and you guys know what 50% of order block means, right? You know what that means, our main threshold of the order block. And I'm going to label this to draw on liquidity, draw on liquidity, and I'm going to put in 1 month to remind me that that is the 1 month on draw on liquidity. Then I can put my line here also. You can see markets actually reacting there funny, which also a draw on liquidity from 1 month. This is the full order block from here. And if I look at this, if I look at this um imbalance in front of me here, I can also see that 50% also means consequent encroachment, and put my line there. That's consequent encroachment, meaning market went to consequent encroachment as I'll draw on liquidity. Now the next point is when you're doing a total analysis, your main focus should be where is price coming from, and where is price going to. And price has touched our draw on liquidity on 1 month. I'll take my Fibonacci here, and I'll do it from the low to the high. Now the rule states that we buy low, sell high. At this particular moment, what do I have here? At a particular moment, what do I have here? I have an order block. That is the first one here. And what do I have here? I have a fair value gap. These are indication for me that they are below 50%, and price is going to come and react there below 50% before price can change direction. But now what I'm seeing is that we are in premium. So on the lower time frame, I should be expecting markets to sell more down to this area, this fair value gap on the discount level. Also, if I put my line here also, just to be conscious of it, there is what here, there is a breaker block around here from 1 month, but my eyes won't be there for now because I'm not trading on the 1 month chart. On the 1 week chart, I'm sorry if the lines are too much. I will delete this Fibonacci from the chart. Now don't forget that price is coming for a draw on liquidity on 1 month. But on the other hand, I'm going to also wait. As long as there's no a change of character in 1 week for me to go down to the 1 month draw on liquidity, I am still bullish, right? From 1 week time frame. I will take what my buy side liquidity on 1 week time frame. My buy side liquidity on 1 week time frame. Now, price is at where? Price is at, let me draw my Fibonacci from the high to the low on 1 week. Price is at, it's already at discount, right? But I'll look at the left hand side. What do I see here? I see a mitigation block. I see a mitigation block here from 1 week, which I'll label here drawn liquidity 2, but I'll label it as drawn liquidity on 1 week. Is there an order block or a fair value gap? There's an order block here that sorry, there's a volume imbalance here that has this candle gone through it, but I might just mark it though, but not to make my chart look so rough in a way. Not make my chart look so rough. So I have drawn liquidity on 1 month here, drawn liquidity on 1 week here, and you can see market tapped the drawn liquidity and also the draw on liquidity on 1 month. But as long as there is no a change of character on 1 week, I'm not going to be looking at that 1 month direction. I'm only going to focus on what I'm seeing currently from 1 week. What do I have here? I have an order block from 1 week, right? You can label it 1 week OB. Don't forget, as long as there's no a change of character on 1 week, you cannot predict for the sell for the more of sales to the discount of 1 month. So as at now, market is retracing back and we are already on the discount from 1 week. Now if I look inside here, what do I have inside here? I have an implied fair value gap. I have an implied fair value gap here. And what do I have here? I also have a fair value gap here. So I have two fair value gap below my discount. I have an implied fair value gap. I'm going to label that FVG. Let me save that as implied fair value gap. Implied okay. So as implied fair value gap. So I have two fair value gap below. I have the fair value gap up here and I have an implied fair value gap. And what else do I have also in that discount, right? If I measure my order block from my high to my low, around that implied fair value gap, what do I see? I see 50% of that order block, which means what? Means the mean threshold of the OB from 1 week. Okay, so I've gotten all the institutional reference point ready for price to react very funny there. Then I'll go down to 1 day. On 1 day, price to me is still okay. So at 1 day, what do I see? There's a draw on liquidity around here. If I draw my Fibonacci on from the low here to the high here, you can see market is already there already. So there's high tendency that price is going to move up. But what do I see? Market has shifted structure here on one day. Sorry, on 1 day, we signal to all sell side liquidity MSS, right? And the last swing point, which is around here, this is like a mitigation block and a breaker block. Is there a fair value gap here? Yes, we do have a fair value gap around here. We have a fair value gap around here and we have an order block here until there's another change of character on 1 day. Until we see a current change of character on 1 day, or change of character take place, we are still bearish on 1 day. Until that change of character do take place, that means we are now bullish, going in the same direction of 1 week. Then I see a what an implied no not implied fair value gap. This is the 50% from the fair value gap. That's consequent encroachment. I see a consequent encroachment there from the fair value gap which my price has drawn into. And also we also have an order block which price will do as a form of draw on liquidity. So I'm going to label this draw on liquidity on 1 day. Draw on liquidity on 1 day. That is this line. This consequent encroachment here. So it's draw on liquidity on 1 day that we actually see there, right? So what am I waiting for? I'm waiting for price to get up to that level. But if I look at 1 day, right, we have what this what do you calling it, the 1 month 1 week order block. We have a mean threshold and we have a mean threshold, which is this mean threshold, and we also have implied fair value gap, and we also have a mean threshold on 1 week. So a market does not react here at the above order block, price can come in here at the fair value gap, which is around here. Let me just indicate this whole zone here. This is a fair value gap zone. If price does not react here and go up, then price might come here and go up. So as at now, we are following the new direction of 1 day. 1 day is telling us that what happened, price has to come back in here. Price has to come in here back and keep going down. Or if this does not happen on the chart, price will just do a change of character. might just do a formal change of character, and what happens? It starts going up to take out the what? The high of one day, which will be here. The high of one day, which will be here, as what? As what? As the buy side liquidity of 1 week. Buy side liquidity of 1 week. So we have two prediction that we're predicting. Firstly, we're looking at the 1 day. The 1 day, this is the next institutional reference point. If I draw my Fibonacci from the high to the low, this is what? This is in premium. So I'm expecting market to come back up here and pull down. Market is close to what? Market is at the what? Consequent encroachment. And it does not react there, is going to react at what? At the other block that has a fair value gap as a source of draw on liquidity. So these are 2 points that I'm looking at for markets to go to and act very, very, very funny. This other block here has a draw on liquidity. Let me even label it as draw on liquidity. This drawn liquidity. So if my price there goes this direction, comes back here and pull down, that means in counter pairs that are aligned with dollar pair, we'll be looking at more of buys. When market does a change of character on one day, we'll be looking for more of buys, right? Sorry, more of sales. If this pair there does a change of character to this direction, we will just take a short sell. That's the counter pairs like GBP and USD. Sometimes gold does not respect it, so I don't really usually call gold much like that. So I'll be expecting for the weekly candle, that will be Monday, to be established. And I'll expect price to come down below the weekly candle, the weekly opening of the candle, and do a change of character and pull up to that direction. I can't say, it's just a prediction. So going down to GBP USD, I will start my total analysis from 1 month. Sorry, this is gold. I do trade gold sometimes. Okay, so I'll start my total analysis from 1 month. Now, if I look at this pair, right, it's just being direct. We're expecting a buy. We're expecting a buy. Sell. No, we're expecting a sell. There's a change of character here, taking out what? Taking out buy side liquidity. And what do I have here? I have a change, what? Sell side liquidity being taken out here. Sell side liquidity taken out here from 1 month. And what do I see here? I see drawn liquidity at the 50% of the other block. But now I'm focused on what? I'm focused more on the weekly direction. And what do I see in the weekly direction? If I use my Fibonacci from the high to the low, right? To the low. This is where market did a drawn liquidity from. It's around here, right? Buy sell side liquidity. And the only institutional reference I can see above 50 is what? This other block. I'm betting price to get this other block and pull down. But from 1 day, I'll only be following the trend. Price doing higher high, higher low from 1 day. And when price gets that direction, price have to get in here before pulling down. That's what I'm predicting. So I'm looking at DXY. I'm also looking at, what am I looking at? I'm also looking at the USD, GBP USD. Thank you very much. Don't forget to subscribe to my channel. Ask your question on the comment section and I'll answer you effectively well. I take my entry from 1 hour. Thank you.